Good morning. Telly Boo, how are you? Just trying to find the chat. Yeah, there it is. All right, good morning. Welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I started Forex, I guess, tinkering around the year 2000. Quit my day job as a venture capitalist in, I don't know what year it was, 2004, to become a full-time Forex trader because it was the most amazing business opportunity I had ever seen. And my job was to review business opportunities. So here I am, rock you like a hurricane. I love what I do, and I love doing it with you. So thank you for being part of this community. You keep me sharp, you keep me focused, and passionate about improving and learning. I want to keep learning. I want to keep doing. So thank you so much for being part of this community and adding positive energy every single day. So what do you want to do today? Dollar pairs, yen pairs, gold, oil, Bitcoin, you let me know. I'll let you be the boss. In fact, I see myself as a servant in our relationship. So please let me know how to serve by asking questions in the chat. Also, while you're at it, would you please click the thumbs up button and tell YouTube this is quality content and they should be promoting it. For some reason, they have no problem promoting get-rich-quick schemes. This is the get-rich-slow channel because we focus on proper technical analysis, fundamental analysis, trader psychology, and actually building a business that creates value. There's nothing quick about success. It's hard work, blood, sweat, tears for years. But at least we are on this journey together. You are not alone. I am here with you. Although you're far away, I am here to stay. Cool. If you look in the description below today's video, you will see links to resources that you might find helpful. There's a book I wrote in 2007, 2008 called Strategic and Tactical Forex Trading. You might like it. It's an honest book. 1/3 of it is on how to practice and keep a trade journal properly. Most people don't create trade journals, and the ones that do, don't do it right. Cool. So think about that. There's also my community, fxbootcamp.com, which is just approximately 20 years old. So if you want to learn how to trade properly, there's 88 hours of videos for $88. You might want to check that out. We also have some live groups. Today, the day trading group and the swing trading group will be meeting for a couple of hours to plan all of next week. So you might want to consider that. Quantbox.co is another company that I own, and it automates the macroeconomic analysis for you. It goes to various websites, governmental and private databases, pulls all the data, compares all the data, ranks and scores them all, and then does comparative analysis between asset classes like Great British Pound versus the Japanese yen. He even does technical analysis. Yeah, pretty cool. So you can check that out. It's a whopping $80 a month. Cool. What else is there? a link to tradersway.com, a trustworthy, ethical foreign exchange brokerage firm that would like an opportunity to earn your loyalty and respect like they earned my loyalty and respect. You might want to check them out. I like them. I recommend them. Tradersway.com. And there's even other like free training courses and stuff, all in the description below. You might want to check it out. Oh, let me read the question. David says, Wayne, if I was structuring a trade on the 1 minute chart, okay, would I be looking at daily buy and sell levels, then initiate around hourly buy and then sell levels? Or is an hourly trend to buy? Well, the time frame doesn't really matter, whether it's the 1 hour, 4 hour, or daily. Because what are you looking at? So I'm looking at Bitcoin here. Is this trend up or down? David, are you with me? Monday dollar. Is this trend up or down? It's down. Okay. Cool. So we're done. That's it. You're done strategically. Okay. Now you might have carried this forward and said, well, now that we've touched this, I want to be a bull. Okay, cool. Then now you're done. Strategically, you see? Daily, 4 hour. Let's go back to the 4 hour. Either way, you're going to get to the same conclusion. Okay? If this makes you want to be a buyer based on price action, then you're going to be a buyer. If you want to be a seller because of this downward trend, okay, then you're a seller. You're done strategically. So whether it's the daily, the 4 hour, or even the 1 hour, you're going to get to your conclusion on bias, whether you want to be a buyer or seller. That's just simply strategy. Which time frame? Well, you pick one. Now, I think where some people get caught is they want to line up the daily with the 4 hour, okay, the 1 day, the 4 hour, the 1 hour, and you want to line all these things up. Yeah, well, how often does Venus line up with Uranus? Sorry. Yeah, not often, we'll say. Okay? So what I would rather you do is just have a strategy. The strategy in this case is your bias. And you use one of those. Let's say I prefer 4H, but every once in a while when the 4 hour ain't working, I'll check out like, where's the daily 21? So very often when I do daily, I do something like this. Oh, there, right? I zoom out and I look for where the daily 21 is, and then I go back to the 4H. So I look at the daily 15 seconds a day because it doesn't update very often, right? So, and I say, oh, I want to be a bull today. So that strategy process is now done. Okay, David and Monday? Which time frame? Doesn't matter. It's strategy. Bull or bear, done. Then you drop into a 1 minute or a 5 minute. Okay? And now you conduct your tactics. So think of it, I don't know, in a military strategy, right? You're watching everything with your drone flying over the city. trying to figure out which house the bad guys are in. And once you've made the determination which house the bad guy's in, you're like, that house. Cool. That's it. So now the next thing is you have to plan the tactical strategy. Okay? How do you breach the building? So on and so forth. What's your plan A? What's your plan B? What's your exit? Right? Where's my exfil? So on and so forth. You plan everything tactically at that point. So if you want to be a bull here, doesn't matter if you made that decision on a 4-hour or daily. There shouldn't be a dramatic change. You're either, it's bullish or bearish. Come on, man. So if you're bullish, now you drop into a 5-er. And let's just change this. I'll change it this way. Okay? So let's say I'm interested in buying today. Do I buy now? Okay. Do I do a trap and break? Okay. Is this going to act as support? And now I just wait. Well, David, I think where a lot of retail traders go wrong is they trade every day expecting similar results. But every day, the market conditions are different. So very often, you'll find that newer traders or shorter term traders do very well in a very strong trend. Even if they're mediocre, like they might be selling here, and then they lose a few, and then they go long, and then they go long, and then they go long. And so now they're doing well, and then it comes down. And what happens? They go long, they go long. Oh, I guess it's bearish now, short, right? Where traders go lose money, because here they lose, win, lose, and then, win. And that's very often where you're slightly profitable or you break even a lot. Okay? Where those traders lose a lot of money is the consolidation. Because then they sell, buy, sell, buy. And that's when bloodbath occurs. So I think you might want to recognize on higher time frames that we're in consolidation periods. Okay, so you're fading every day, and then by Friday, which you wimped out, and yeah. So again, looking at a higher time frame, like we're staring at Bitcoin, one thing that I think a trader should recognize is Bitcoin hasn't done anything for a very long time. Okay, we're back at the February price. And do you think this price matters? Yeah. So we're at support and it's holding up, and then the resistance is here. So you're either waiting for a breakdown, rally up, and then you sell it, or you think it's going to continue into the apex, break, okay, and move back up. Okay? But in the consolidation period, what happens is you could be a bull or you could be a bear, and nothing happens. Nothing happens. Okay? And so what you need to do is filter all that out with your bias. And bulls only buy a dip at the bottom. So maybe you bought this first one. Okay, and you're probably still in it, or that one took you out for break even. And if it comes down here again in the future and you're a bull, that's a price in which you would consider buying. If you drop into that price around 25, we'll call it 26,000, between 26,000 and 25,000, that's when you drop into a smaller time frame again, looking to buy. Very often people are looking to buy and sell, and they're trading the price action and volatility on a short and medium term, but on the longer term, they don't realize that they're just sort of in the middle of nowhere. They're not really at support on the daily. They're not really at resistance at the daily. They're somewhere in between, and they can't figure out why on a, let's say, 15-minute chart, why price action comes and goes, and there's no follow through. Well, on the longer time frame, you're not actually on support. You're not actually on resistance. You're somewhere in no man's land. And bullets are flying both ways. Bullish bullets and bearish bullets, right? So that's why you got to get your strategy right first. The high time frame. And the strategy is not the technique in which you trade. That's a tactic. Okay? The strategy side is simply knowing what team you're on. Are you a bull or are you a bear? And if you're not a bull and you're not a bear, okay, you're either a pig or a bat. Okay? Pigs get slaughtered, and bats are broke-ass traders. Okay, I'm hoping to see some follow-through today on my oh my WTI. Okay. The day trade today was buy at 72. Target for today is 74. $2, that ain't bad. That's an okay day. Ultimate target is 76 and 77. So there's $3 to $4 in this. 2 of them should come today. 2 or more should come today because it could just pop all the way up, hit the target, and then do the pullback. How many people are trading oil? $70, $70. 70. Yeah, okay, so you're in at the central pivot. That's good. Yeah, Sammy's in at 70. Yeah, okay, central pivot. Yeah, cool. Cool beans. David says, so it's like a Russian doll. Daily level strategy and then 15-minute strategy. Well, no, it's strategy and tactics. I don't care how you get your strategy down, whether you're a bull or a bear. And that's why I'm like, I don't really care whether you do it on an hourly chart zoomed out, a 4-hour kind of zoomed, and a daily zoomed in, because you only need to see really the last couple of weeks, so you don't need to see much time on the daily. I don't really care how you get there. Think about this. Most traders on this planet don't even look at a chart, and yet they have a strategy. And so those that are so price and time focused, right? If you're a technical analyst, we forget that. We're looking at like, what is the MACD doing? What does the RSI say? What about the stochastics? What moving averages? Is it an EMA or an SMA? Okay. What pivot point do you use? Some people use these other different pivot points that are invented after I used pivot points. I don't even know what those other pivot points are, nor do I actually care. Think about this, like George Soros doesn't use a chart, but he broke the Bank of England, put $1 billion in his pocket, and then the next day put another $1 billion in his pocket. Had nothing to do with his RSI, right? So I don't care how you get to your strategy, but I care that you have a strategy. What is your bias, and can you defend your opinion? You should be able to write a paper. In the first couple of sentences, you clearly articulate your strategy. Then you outline how you're going to defend it, and then you highlight at the end the potential risks to this strategy. And the risks being defined as when you know you're wrong. Cool. And then, okay, once you got your strategy down, now you use your chart. So your charts, in my opinion, the greatest thing they can offer you is knowing when not to trade and know when to get out of a bad trade. Okay. David says, so what is that, trading without a chart? Does that mean reading the ladders? No. Okay, do you think, for example, George Soros decided to break the Bank of England because of he saw something on a chart? Or that he's reading price ladders to show volume? No, it was completely fundamentally based. So you could use things like economics. Now, he was using something other than economics. He was actually trying to show a flaw in the system. The Bank of England and the government of the United Kingdom decided they want to be part of the new Eurozone, whatever they call it, Eurozone, the Euro, whatever. There was there were variants of it, but whatever. They wanted to join the EU. And part of the requirements, joining that group, there were very specific requirements that both the government and the central bank had to achieve. Now, George Soros said, dude, we all know what those requirements are. And we all know where the government and the central bank is relative to those requirements. He's like, dude, do you understand the flaw? If I understand what you're going to do before you do it, I can take advantage of that and make money, so this whole process is stupid. I believe George Soros loves capitalism, hates socialism, and wants to point out the flaws in capitalism so that somebody fixes it. So he's like, dude, if I know what the Bank of England's going to do before the Bank of England's going to do it, well, that's stupid. So he's like, I'm going to point that out. So with the use of leverage, he outspent, if you will, the Bank of England. And then that's why we have a great British pound today. George Soros, one man in this universe, saved the great British pound. Otherwise, the UK would be on euro if it wasn't for George Soros. Kind of interesting, right? But not on a chart. Price and time data is what a chart tells you. So if you, I'm looking at WTI. Let's say I go through the universe of the energy universe. Let's say I'm an expert in energy. And by the way, what a great thing, man. If you had some money, can you imagine you fly to Vienna every month for the OPEC meeting and you get to write that off in your taxes? I'm going to Vienna again. Okay? Huh. It's not a bad life. Anyways, let's say you're an expert and you pay attention to all the details, supply and demand, and everything else that goes into this. And you're a bull on oil right now. Great. Now you open your chart and you're asking yourself, do I buy now or do I buy later? That's the only thing that charts tell you. Should I buy now or should I buy later? What's a good buying price? So I've already drawn all this out to you. Okay, look, I did this a long time ago, in fact. We identified this as, let me do it in a brighter color. I identified this price as a good price to consider buying oil. And then if it makes a higher high, then I think this will be an interesting price to then buy. Good. So now I got prices identified. The second part, and by the way, price is on this side. Okay? Now the second part for buying is at what time? Oh, how about like a moving average crossover? How about an oscillator crossover? How about a daily pivot on top of a weekly pivot? These are all good times. You might get out of a 4-hour. You might be on a 15-minute, a 5, a 1, but you decide somewhere around this price, which is 70-80, that you want to get long. It doesn't tell you you should get long. You already know. Why? You go to the OPEC meetings. You go to the parties. Okay? You're an expert in your industry. And based on your expert analysis of supply and demand and the politics of what's going on in the world of energy, you're a bull. You open up and you're like, okay, when we get down to this price, I want to drop into a small time frame and figure out what time I should buy. That's all the chart tells you, price and time. What price would you like to buy it? What price would you like to sell it? Now, or what time would you, right? Now, someone else might disagree with you, and that's why you get ebb and flow. But David says, wow, supply and demand on the, right? And on the 1 minute, on the 4-hour. No, I think you're complicating everything way too much, David. First of all, there's no supply and demand. There's no trend. There's nothing going on in a 1 minute. Okay? Now, I'm not saying you can't trade the 1 minute, but there's nothing to make decisions on the 1 minute. Now, if you can't do fundamental analysis, then you should be a trend trader. Okay? A trend trader only uses technical analysis. Okay? Now, to avoid getting caught in the noise, because most people say, well, that's me, and then I see you only trading on a 15-minute chart. No, that's not a trend trader. You're really a volatility trader. You're really a short-term price action trader, but you're not a trend trader. Okay? Think of the turtles. By the way, I'm going to put trend trading in my new book. My new book is going to outline 63 strategies. For trading. One of them will be trend trading. Okay, a systematic technical trading strategy. And you probably want to be on this higher time frame. Maybe you want to be on a shorter one like this. Okay? And therefore, you would have been prepared for all of this. But I would rather you be better than that. I'd rather you filter your systematic process with a bias. A true trend trader doesn't have a bias. Okay? Greg says, funny thing is Kramer says oil is going lower and not to buy it. Right, but a trend trader, for example, would say, irregardless of that, based on your rules of engagement, this is a buy, and you're already at an opportunity where you could probably move your stop to break even, and now you're done. I don't disagree with the fact that oil can come down, or maybe even should come down, or will come down. Okay, so I'm not saying you have to be a bull. But what we do know is that we have found a bottom. Right, Greg? We have found a bottom, so that's potentially bullish. Okay? We also are in a position trade, so that is also for the month of June bullish. But July, August, September could be down. Yeah. Okay, so luckily the government reports to us. Okay, and we can find lots of inventory data and stuff. Okay, we know how much oil is in supply. We can read a lot of this and figure out like demand. So, right, like the easiest part of this is the supply. And then you can do economic analysis of the economy to figure out demand, right? So like when I say it's easy to do supply, okay? Is there a shortage of oil right now? Quantity, price, label it, oil. Okay, you have to mark it, you have to label it properly. Okay. Great. So, what curve is that line, the orange line? What curve is that? Is it supply or is it demand? Okay, so quantity gets bigger from left to right. Price gets higher from bottom to top. This is demand because you know, logically, if prices are high, the quantity demanded is low. But if you lower price, the quantity demand is higher. That makes sense, right? You put something on sale, the amount demanded goes up. Yeah. All right, so what we're looking at here is supply. Okay, so this is what we're looking at here. if supply falls, or if supply goes up, changes the price. So here's how we do this. What should the price be right now? Over the last 5 years, this time of year, we could have 420 million barrels. That's of the 5-year average, that's the low. And of the 5-year average for this time of year, that's the high. Of course, we know how to do this, right? You take the mean, figure out the variance, calculate the standard deviation, and now you have your 5-year up and down. Cool. Just statistical analysis of the supply of barrels of crude in the United States. And where are we here? Just slightly what? Slightly below average, would you say? Maybe here is halfway, right? Somewhere in there. So we are probably what? Somewhere between supply 2 and supply 1. So we'll call that supply 4. Okay. And you're like, well, what? Below average. So let's say the average equilibrium is that's supposed to be a straight line, by the way, is 3.5. Okay, the average supply. And now we have slightly less than normal, so it's 3. You see that? So what happened to price? Well, the first equilibrium was about 2.5. And now the new equilibrium is 3. So it's not a dramatic change, but it may be slightly higher, right? So Greg says Jim Cramer believes oil prices are going to fall. And it might be true. But it wouldn't be because we have too much oil. It'd have to be something else. What could the other thing be? Okay, lower demand. So we shift this curve to D2. Demand 2. And it's lower demand based on the assumption of the economy going into recession, and a recessionary economy needs less energy. Okay, cool. So we call this in economics a double shift. Okay? Now, for super extra bonus points, what's the outcome of a double shift? I'll just put double shift. For super extra bonus points, what is the outcome? A sheesh. A sheesh right out of the gate. That's absolutely the perfect response. Absolutely 100%. You get a shiny sticker for that. Indeterminate. Absolutely correct. Because we don't know how much it's going to shift. We don't know how bad the recession is going to be. We do know the quantity of oil. And we do know the 5-year average, okay? So we know the seasonality. Okay. We know it. It's factual. We know how many barrels we have in storage. That's also factual. So supply is solid, but is Jim Cramer correct? Are we going to have a recession? We don't know. Is it going to be a mild recession and a quick out? We don't know. Is it going to be a mild recession that lingers for years? We don't know. Is it going to be a hard recession? Well, we don't know that either. So it's indeterminate because we don't know how much it will shift. So Jim Cramer might be right, but I would like to know his variables. Okay. Okay. So anyways, this is nice information, isn't it? Look at European diesel imports from Russia, 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 from Russia. Wow. Wow, like just straight down to Zippo zero. And look at the difference from US, from US, from US, from US, 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 and all of a sudden, okay, and of course, we know India is making money hand over fist. Like, India is importing something like 10 times more oil than normal and then creating diesel from it and then selling it like crazy. Yeah. So anyways, that's today's lecture. What do you think about prices? Prices are quite a bit lower this year than last year for gasoline. Quite a bit. I don't drive my vehicle very much, but I know last year I was surprised. I put some fuel in the Porsche and it was $100. Now to a European, they're like, that's nothing, dude. My Volkswagen Golf takes $100. All right, but that's a lot for American. Now it's like $60, 60 something bucks, right? Favor wants to more stories about trader psychology. That will be in my third book. So you'll have to wait. Ashish, you watch the macroeconomics course all the time? That's cool. Well, you nailed it. I'm telling you, on certainly an undergraduate class on micro or macro economics, there's definitely an exam question about a double shift. And they'll give you, let's say it's multiple choice. They'll give you some pretty compelling answers. But of course, D is indeterminate. And it always tricks undergrads. Faux show. So if you understand that so quickly, I would say your knowledge of economics is now at an undergraduate level. Yeah. You're pretty close to a degree. How nice is that, huh? Let me tell you, the $88 is cheaper than going to university for 4 years. Sky Killer says, Coach, will hawkish versus dovish be for the US dollar? No, it's central banking and monetary policy. Okay. But I'll make a determination about that in an early chapter, where the reserve currency is unique. Okay. But yeah, but to answer the question directly, no, it won't be specific US dollar. But my goal is for someone who reads the book could go to like the RBA website. I cleared my history and now I have this terrible search engine. I'm telling you, all this is going to go away. AI is way better than these search engine algorithms. Way better. Okay. So the point of the next book, Hawks versus Doves, is to have somebody go through this website and understand what's going on. So you're like, oh, look at that. Oh, look at that. Okay. Oh, look at that. And it all makes sense. Okay. Should be able to read this and understand. Okay. Pretty simple. I'd say the book would be equivalent to an undergrad and then a graduate course on macroeconomics. There's that Bitcoin. Climbing, climbing, climbing. Okay, she's climbing. Okay, do you think it'll continue? Simple risk on, right? Simple risk on trade here. Okay, what this shows is if you bought it here, remember I drew this when we were there. If you bought it there, this is where your stop would be now. Okay, that's on a 15-minute chart. You want a 5-minute chart. Okay, you're already there. Roll in, roll in, roll in. Which means your stop is pretty close to break even already. Probably just slightly a tight stop. How many people like the idea of a book about 63 different types of technical trading strategies? Yeah, I was going to do something else, but I asked the swing trading group, and people said no, they want books on strategies. So I'm like, oh, okay. So cool. So I think I have something like 7 categories of strategies. So like, for example, exit strategies, volatility strategies, trend strategies, oscillator strategies, that kind of stuff, right? Sky Killer says, that will make us better traders. Well, that's a bit strong. So I think like the focus of the book is to refine your skills. You're kind of saying that, but I get concerned about things like success. Will it make you a more successful trader? Well, I don't know you. Will it make you a better trader? Well, I don't know you, right? All that kind of stuff, right? So on and so forth, right? Oh, am I missing what you were saying? Yeah. Okay. Oh, you're right. So, anyways, more profitable traders, no, but skilled, yeah. Confident, yeah. So that's kind of what I'm focused on is skill and confidence. Breakout strategies, reversal strategies, volatility strategies. So there's, it should be all right. I think I'm going to sneeze. Better mute my mic. No, I think I got it. Boom. Hit your stop. What time is it? Yeah, it's still half an hour before the market open. Now, if you're trading it on a 15-minute chart, then you're totally fine still. Okay. Remember that there's 2 ways to trade a breakout. If you're a bull, you're buying here or you're buying here. Okay. So on a 15-minute chart, you see how you have that and then up and then down. So now this is identified, then up, and then down. So this is identified. We don't really have the up yet. So on a 15-minute chart, okay, you'd want your stop, assuming you're buying here, of course, right? You'd want your stop below this. And at that time, PSAR confirmed that. So at that time, let's see. Yeah, PSAR basically said the same thing at that time. Whoa, 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 whoa. Do, 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 do. Clear this out. So remember, 26,000 is kind of the interesting number on Bitcoin right now. Aussie Swissy just touched monthly M4. Yeah, yeah, yeah. Yeah, there's a lot of things that are topish. Lots of things are topish right now. All right, I guess I need to move. I'm just kind of lost. Like, here's a bottom-ish. So like peso, for example, it's just been trading beautifully. Is it going to fall forever? Well, let me change the point of view. Let's do position trading bearish bias. Wait, is that it? I must remember it differently. I must have been looking at it as a swing. I was just looking at this the other day. So it must have been a swing bearish bias that I was looking at, yeah, and drop into a smaller time frame. All right, yeah. So it was a swing trade, okay, and the basic concept of a swing trade, let me squeeze this in here. There we go. All right. This is the sell zone for USD Mexican peso for the entire week. And of course, we talk about this in the swing trading group. It's a swing trade. Okay, now the previous week was here. Okay, and the previous week was here. Do you sell above the pink zone? Huh? Do you sell up here, guys? No. No, no, no. No, 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 no. You only sell lower highs. So now that you're down here, okay, you look at this sell zone and you say, oh, if price rises to this level, somewhere between these two prices, I want to sell. Great. Makes a new lower low. And we already knew somewhere between these two prices you want to sell. Cool. Now you can use moving averages to do the same thing. I'm okay. But the other thing I want to point out is last week, if you sold there, the target was between these two numbers. And this week, if you sold up there, the target was somewhere between these two numbers. Nice, huh? What do you think? It's pretty, right? And so now you can carry this forward somewhere around there. If then. If then. And the target is down here somewhere. What would override this trend move? The monthly target. Those are just weekly swing trades. Those are just swing trades. Yeah. Yeah, it's a nice trade, right, Highlander? Okay. Look at this. I want to show you this. This is pretty interesting too. Guess we'll go from weekly to daily. I want to show you this. Delete. Okay. This price was back in January, the 1st of January, a couple of things. This predicts up. Okay. And the other thing is, this is the conservative projected high for 2023. And that was carved in stone, 19.8676 was carved in stone January 1st of this year. And that would be the conservative projected target for the year. Do you think that's random? Was that a lucky guess? You know what's also weird about it? It's on the first day of the 6th month. That might be random, but still, you're like, really? Anyways. I have to go weekly, right? Yeah. And you're like, what do you mean it's the conservative target? So let me change the template. Actually, I don't think I can do it on biased. I can't do it with biased pivots because I don't have yearly calculated. But anyways, if it was a biased pivot, I can do monthly and weekly and daily on biased pivots. And that M4 is always labeled conservative bullish target. So anyways, how interesting is that, huh? Remember, you get this chart template as a member of FX Bootcamp. It's included with your membership. Okay, there's a little 5-minute chart. Okay, notice here we're at support. Oscillator oversold at support. Oscillator crosses back into the trade zone. Okay, permission to buy. Now you're like, well, what about this one? You're not at resistance. Anyway. Another look at it. Here's on an hourly chart, even more clear. Okay, see the support? See support, 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 support. Permission to engage. You want to buy at support when it's oversold. And in particular, you want to buy at support when it's oversold and the candles are no longer making lower lows. Yeah, well, that's what that is. Once you understand the math, you're like, oh my God, that's right. If it's at support and it's falling, right? It falls all the way back to support, but I'm a bull. When should I buy it? Well, when it hits support and then stops making lower lows. Oh, well, that's what stochastic tells me. Yeah, so now you have a stochastic oscillator. Sweet. Totally makes sense, right? You're like, that totally makes sense. Uh-huh. Doesn't happen very often, though. No. Okay, so now on the flip side, if you believe that's resistance and you're a bear, what are you looking for? Okay, you're looking for price to come up and hit that and be way, way overbought and then suddenly not making higher highs. You're like, wait, you slammed into obvious resistance and you stopped making higher highs. In fact, you're starting to make lower lows. Yeah, well, that's your future self. And that would be how a double top is born. Cool. Should I put that in the book? Yepper. How about this? Price is going up, but the oscillator's going down. Bulls are taking profit. Cool. Huh? Look at that, huh? Release date by the end of the year. Yeah, there's a lot of things I need to plan out and all that kind of stuff. I have to get permission rights for the charts and I have to finish the manuscript and all that kind of stuff, obviously. And then I got to have it proofread. So maybe you guys could do some proofreading. I have a rough draft of the cover design, so I thought maybe I'd have a few different covers and you guys can help me choose which one. All three this year? No, probably every 6 months. So right now, for example, I've paid to have a website developed for us to collaborate. You can help me write the book. Give me some feedback on such things. So I'm going to build a site where I can maybe post some things for feedback, rough drafting, even just things like I'll keep you abreast. If my goal this week is to, write 2 of the strategies, I'll make that declaration, and then along the way I can give you some updates, and you're like, good job, man, keep going, right? That kind of stuff. So like a timeline, if you will. So with that in mind, would any of you help me in a situation like that? Would you be interested in kind of tagging along as I write it? Cool. Thank you. Has anyone done that before? Has anyone seen anything like that before? Can you point me into the right direction where an author collaborated with the community as they were writing the book? Has anyone done that? Seen anything like it? Is there an example you can point me towards? Because I have certain things in mind, but I haven't seen anything like it. Johnny says copy editors. No, but I mean like Johnny, I share a group goal. So I tell people, this week I want to, let's say, I'll just make up a goal, right? I want to write, 5,000 words. And I share that, and you guys can see it, and then I update you. And then, so it's not really like a blog post. It'd be like, I don't know, like more of a community feature, but it'd be interesting if I had those things and I put those there. And then there would be another scenario where I'm like, what do you think about this chart that I'm going to include in the book? Do you like it? Do you not like it? And then another one, like, what do you think of this book cover? Of these 3 book covers, which one would you want? So more than a Google document, right? More than that. Okay. So if you've ever seen that, please leave a comment in the description below today's video of an author doing that, where there's a community and an author, and the author is kind of like collaborating with the community to keep the book on track and keep the book focused and keep the book tight. With some polling, that would be, that for sure. Okay. Yeah, so like Richard's saying, on the fundamentals, you should do this, that, and the other thing. Yeah, so like I should be able to ask the community and do a bunch of things. So I have some ideas anyways, but if you have seen and witnessed this, or you believe some author is doing something close to it, let me know. I doubt that I have a radical new idea that no one's ever done before. I doubt that. Okay. So anyways, I got to go, yo. It was real. I hope you have a wonderful trading day. Okay. At 4 p.m., the swing trading group and the day trading group is going to meet to plan all of next week and for me to answer questions. So I'll see you guys at 4 o'clock for that. I'm trying to keep them tighter. So we'll try to get it to 2 hours instead of 3. Okay, because they're usually close to 3 hours, sometimes even 4. So I'm going to keep them tighter, so that kind of stuff. So so I'm looking forward to that improvement. I'm doing my best. I think the last 2 were about 2.5 hours, 2 hours to 2.5. So hey, good, a little bit tighter. Okay, so and of course, if you're not a member of FX Bootcamp, I invite you to swing on by. There's some big changes coming, by the way. Hint, hint, nudge, nudge. Big changes coming. So, yeah, that's all I can say for now. So, and good changes, by the way. I'm an entrepreneur. Change is good. Change is right. Change works. So, peace on earth. May the pips be with you. May your profits be above average. Have a fantastic day. I'll see you later, babe.